property prices soared by almost 13% last year. That is according to the latest national figures that have just been released today. Now, Cotality data also shows the markets where it's getting even harder for people to buy a home and where the latest boom now appears to be ending. Now, for more on this, I'm joined by Cotality's head, Tim Lawless. Tim, Happy New Year.
G'day, Amelia.
So I'm going to bring up a breakdown of the prices from city to city from your data here. We've had Brisbane prices go up more than 14% in a year. Darwin and Perth, we can see now 18% gains in a year. But then there's those bigger markets like Sydney and Melbourne. They're still 5% higher, but a bit more subdued there, Tim. Now, are places like Melbourne and Sydney, are they just getting too unaffordable for people? Any evidence that people are now moving ship?
Well, I think it's fair to say that about Sydney, but not Melbourne. I mean, Melbourne's been a soft market for some time now. Sydney's Australia's most unaffordable market. It's got a median house value that's getting close to the $1.4 million mark now. Melbourne, on the other hand, we haven't seen a gap between Sydney and Melbourne prices this wide since about 1999. And I think in Melbourne, it's probably more a factor of there's much less investment driving demand in that market. There's also higher property taxes, less interstate migration. So it's a range of factors that have probably dented the Melbourne marketplace. But also you've got some macro factors. I think the higher inflationary rates and this renewed hawkish stance from the RBA has definitely dented confidence. And quite often it is Sydney and Melbourne that tend to lead the cycles in terms of housing sentiment.
So as you've mentioned there, Tim, we've had this more hawkish sentiment from the RBA, and even some economists now are tipping interest rate hikes this year. Are you of that belief that this will happen, and what do you think this will do to the property market?
Well, at the very least, I think we're in for a stable interest rate environment in 2026. And as you say, there's definitely a risk that rates could rise as early as February. We're not going to be seeing the same sort of stimulus for monetary policy as we saw in 2025 through the coming year. So I think with that in mind, it's going to be a very different environment. We're already in a housing market that's never been this unaffordable. And now we've also got either a stable or potentially higher interest rate environment. I think both those factors are probably going to be dampeners for housing market outcomes through 2026.
And we've had federal subsidies increase in recent months for first home buyers. Is there any evidence in your data that they are pushing up demand and therefore prices, as some people predicted that they would?
Well, absolutely. We're definitely seeing more evidence that this is the case. It has been the lower quartile of the market that's driving the strongest capital gains. That was the case before the 1st of October when the 5% deposit guarantee was expanded. But since September, we have really seen a divergence between the lower quartile and the upper quartile, even the middle of the market as well. And I think what we're seeing now is very intense competition between first home buyers, between investors, and more mainstream demand being deflected towards those lower price points, simply because that's where they can demonstrate an ability to service a mortgage and obtain credit.
And Tim, your data is also looking at rents. 1/3 of Australians are renters. Now, I've seen those graphs you've sent to me. There's this surge on rents that you see from 2020, which is just incredible. It just goes up and up and up and up. Any more relief for renters predicted by you in the new year?
Yeah, the last 5 years has been extraordinary. Rents nationally are up nearly 50% in 5 years. The 5 years prior to that, they were up around 5%, to give you some context. Unfortunately for renters, I don't think there really is any relief. We did see vacancy rates just slip a little bit higher to 1.6% in December, up from a record low of 1.5%. My guess is that's probably more seasonality than anything. And coming into 2026, either we're at nearly record lows for vacancy rates and we'll see further upwards pressure on rents at a time when renters have never had it this tough. Rental affordability has never been this stretched.
What do you think can be done to help renters who are stretched in 2026?
Well, there's the obvious ones of more rental assistance. Getting more rental supply into the marketplace is critically important. But I think for renters, we're already starting to see signs of households becoming larger, so more group households forming, more multi-generational households. I think the worst case scenario is we probably continue to see increasing levels of homelessness and rough living. These are all the downside impacts of rental affordability being as chronically stretched as what it is.